Hi. Nowadays, when an IPO comes to market, particularly one from these so-called new age tech companies, the investors look at the list of funds which have invested or institutions which have invested and take a great deal of comfort from that, because these companies may have large venture capital funds, private equity funds, sovereign wealth funds, other large funds invested. And so the investor thinks that these institutions have done the due diligence, so it's a safe and good investment, but that's the wrong way to look at it. First of all, always do your own numbers, and particularly when new valuation metrics are being tom-tommed as the reason why you should buy, because there's only always one way to value a security, which is looking at its future cash flows. That is one. And if this was so easy, then even in the public markets you could have bought the stocks which have the maximum number of buy rating, but you try doing that and you will ensure underperformance for your portfolio. Then the whole model of venture capital investing is that when they invest in 100 companies, they fully expect that 70% of these will go down the drain, that their investment in 70% will go to zero. Out of the 30, 20 will give some returns, 10 may give you multi-bagger returns to make up for all the investments which went bust. So they fully expect that 70% of their investments won't do anything. So just because they have invested in a business doesn't mean that it's the greatest business on earth. The other thing is that very often the IPO is at a multiple of the last fundraise. So the last time the company would have been valued 3 months or 6 months ago, that valuation is multiplied by twice, thrice, 4 times for the IPO price. And if there is a component of offer for sale in the IPO, then usually that means that that is the price at which the investors, these funds, are exiting, and that is the entry price for you. So they're two completely different things. The exit price for them is the entry price for you. So keep all these things in mind and don't take the investment as a good housekeeping seal of approval.